Department of Commerce of Gauhati University.
Okay, just I am to say one thing. Tomorrow also I shall come to the class. Today our professor Monica sir is there. Okay, please sit down. And
Anything that happens is an event. Remember, anything that happens is an event. Now there is rain. My friend from Africa, please listen to me. Now there is rain, is an event. Now there is an earthquake, event. The manager of your company is having headache, event. All these things are event. You have sold goods, event. You have purchased goods, event. There is depreciation, event. You paid money, event. You received money, event. So whatever happens is an event. An event is of two types. Event is of two types. One event is connected with money, another is not connected with money. One event is connected with money and another is not connected with money. The event which is connected with money is known as economic event, and the event which is not connected with money is known as non-economic event. Or you can say the event which is connected with money is monetary event, and the event which is not connected with money is non-monetary event. Like manager of your company suffering from headache, this is non-monetary event. But you have purchased medicine for the manager for his treatment, that is having connection with money, that is monetary event. The second question, all monetary events are transactions. Only monetary events are transactions. If anybody asks you what is transaction, you will say all monetary events are transactions. Non-monetary events are not transaction. Anything that happens is a transaction. No, anything that happens is an event. Event may be of two types. One is monetary, other is non-monetary. Monetary event is transaction. Non-monetary event is not a transaction. Remember this much? Now for recording these things, every transaction has two sides. One is debit and other is credit. Every transaction has two aspects. One is debit, other is credit. This debit and credit needs to be recorded properly, and that is you can say there is bookkeeping. The preliminary stage is bookkeeping. The beginning stage is bookkeeping, and the higher stage is accounting. And both bookkeeping and accounting put together, the total subject is accountancy. Bookkeeping is the starting point up to trial balance, and accounting is the higher level after trial balance. And bookkeeping, accounting, theory, practice, all put together, it is accountancy. Accountancy is a subject. Anyway, now come to again debit and credit. For recording the debit and credit in the books of account, that is for passing the journal entries. What are the steps of bookkeeping, or what are the steps of accounting? First step, you identify this is a transaction. Suppose headache, manager is having headache. This is not a transaction to be recorded. There is rainfall. This is not a transaction to be recorded. But if it is having, you have purchased water, that is a transaction to be recorded. So you have to identify what is a transaction. Second, you have to identify what are the two aspects of a transaction. Like one is debit, other is credit. One is debit, other is credit. So how to record this debit and credit? There are two approaches coming from two countries. One is coming from UK, English approach. Another is coming from USA, American approach. There are two types of rules of debit and credit. One is coming from England and one is coming from America, USA. So what is coming from England is known as what? What is coming from UK is known as traditional approach. Traditional approach. And what is coming from America is also known as modern approach. Two approaches. Now according to English approach, there are three types of accounts. You are getting all confused, you forgot. Let me tell you. and I'll give this video to all of you, okay, so that you can remember nicely. I'll take one person's name, the number, and make a group, and others will be sharing and join the group, and I'll share it to you. That will be good for you. So according to English approach, there are three types of account: personal account, real account, nominal account. Personal account is the name of the person or business or institution. Your name, personal account. Tata Limited, personal account. Gauhati University, personal account. Cotton College, personal account. This institution, name of business, name of human being, Ram account, Sham account, Tom account, Dick account, personal account. And asset account, suppose building account, land account, these are real account. And nominal account is some account which does not have any existence, any shape, like salary. Have you ever seen salary? You ask your father to show you salary, your father will show something, you say, no, it is cash, show me salary. What is the color of salary? What is the color of rent? These are nominal account. There is no shape of salary, rent, wage, commission. These are nominal account. So we have found there are three accounts: personal, real, nominal. You remember, you have learnt it. I am refreshing. In case of personal account, debit the receiver, credit the giver. In case of personal account, debit the receiver, credit the giver. In case of real account, debit what comes in, credit what goes out. You say it about asset coming. So debit what comes in, credit what goes out. Suppose you have purchased building, building comes in, building debit, cash goes out, cash credit. And in case of nominal account, debit expenses and losses, and credit gains and income. Suppose you have received rent, rent is income, cash has come, cash account debit to rent. And you have paid salary, salary is nominal, salary is expense, salary account debit to cash, like that. I am putting it in a very short way today. If you need in detail, I will go for that. So, personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. And nominal account, debit expenses and losses, credit income and gain. This is English approach. This is traditional approach. This is coming from England. Some people have learnt it and some people have learnt American. But if you follow American approach or if you follow English approach, answer will be same. You can follow any approach. And American approach is said to be modern approach. And modern approach, in American approach, there are 5 types of accounts. American approach, 5 types of accounts. You can say it is bigger, but I have seen American approach is much easier. You can follow anyone. I am revising. Have you ever heard of American approach? Maybe, and you forgot now. Let me put it very simple way. Very simple way. So, according to American approach, there are 5 types of accounts: asset, liability, capital, revenue, expenses. Asset, you understand, real account. Come to American approach only. Asset, you know, real, I mean, asset means property, etc., cash, building, furniture, asset. Liability, creditor, bank loan, all these things, liability. And asset minus liability is capital. You know that. So, capital, third one. Then revenue. Revenue means the money which regularly coming to you. Like you have sold, you are selling goods. Regularly you are getting money. Regularly you are getting rent. What you are getting regularly is revenue. That is not income. From that you have to deduct expenses, then income. So, expense you understand, for some temporary benefit you pay the money. If you pay the money for a car, it will be not revenue, it is asset for you. So, this will be asset account, number 1. But if you purchase a petrol, this is for temporary benefit, it is expenses, right? If you purchase a building, this is asset account. If you pay for, say, house rent, if you pay for electricity, if you pay for cleaning, temporary benefit, these are expenses. So, please remember, according to American approach, how many accounts are there? Asset, liability, capital, revenue, expenses. Now, let me tell you the rule. I will send you in your group also. I have some other video I will send you. It will be helping you to understand. But you have to understand very nicely these things, this debit and credit. If you are in a problem, suppose you can drive motorcycle and you are driving in the highway and suddenly you forgot where is the brake. You cannot do that now. Full concept has to be there. You are doing accountancy, journal, ledger, balance sheet, all these things. If you forgot the rule of, suppose, capital account, the rule of debiting, you forgot it, then you shall not reach the goal. Similarly, you have to clear concept, right? Clear concept. You can contact me if you need any more clarification, but now in small video I am making this for you. So, asset, liability, then capital, then revenue, then expense. Is there? I am not using this today. So, okay, fine. Let me give you, you think this way. If I ask you, asset, sir, sir, asset increase, sir, you say that way. You say that way, I have seen. Let me tell you so beautifully. Asset, expense, right? This is capital, this is liability, capital and revenue. These three, you understand? And this is asset and this is expenses. Okay, I am putting it here only. Asset and expense, increase debit, all others are reverse. Asset and expense, increase debit, all others are reverse. Means asset and expense, you know, increase debit. So, asset and expense decrease credit. So, you understand asset and expense, and others are reverse, opposite. Once again, asset and expense increase debit, all others are reverse. Tell with me. You come this way, you come this way. Asset and expense increase debit, all others are opposite. Asset and expense increase debit, all others are, commit to memory that. Asset and expense increase debit, all others are reverse, opposite. Now how? Let me explain. Asset and expense increase debit. এইটো হাতত ৰাখিব পৰি যাব, এইটো হাতত ধৰি ল'ব তলত. Asset and expense increase debit, so decrease credit, right? And if you know the rule of asset and expense, all three are opposite. How simple? So my point is, asset and expense increase debit, all others are opposite. How do you find it? Interesting. Asset and expense increase debit, all others are. Tell with me, everybody. Asset and expense. Tell. Asset and expense increase debit, all others are opposite. Today you see the book and find out and check it. And you find in this one sentence everything can be remembered. Everything can be remembered. Otherwise you learn it, understand it, and then forget it. But you remember my poem. Asset and expense increase debit, all others are. Can you remember? Remember the rules of debit and credit. And one more thing, can you tell me the time? It is just give me a signal when it is 10:30. How much time is left?
It's 10, 12, right?
How much time?
10, 12, right?
10, 12 minutes left to reach 10:30.
18 minutes.
Okay, you tell me? Okay. Okay, this double entry bookkeeping, little bit more. I'll ask you, this double entry bookkeeping means one is debit, other is credit. Every debit has a credit, every credit has a debit. There cannot be a third one. You understand this? So this is double entry bookkeeping. And there is another type of bookkeeping which is not double entry. What is it called? Another type of bookkeeping is there which is not double entry, single entry. Another type of bookkeeping is there, it is single entry. Understand? Another type of bookkeeping is what? Single entry. Single entry is practiced by those people who do not understand double entry. And you can tell me, sir, everybody should maintain double entry, it is so beautiful. But the problem is that all people have not learnt it. Your mother does not know accounting but makes a list of the goods purchased from the market. This is an accounting, single entry. A doctor does not know double entry. He maintains something, little bit of account. A small business, he does not employ any people, any person who knows double entry. He does not employ, cannot employ a BCom pass accountant. So he maintains something in small book, whatever he likes, single entry. And the whole world, can you tell me which is more popular? Double entry is more popular. Okay, let me tell the dialogue. Double entry is more popular in the world, but more people follow single entry, you support or not? double entry is more popular in the world, but more people follow single entry. Controversial, no? Contradictory, but this is true. This is true. Or the whole world, how many people come to take commerce, you see? How many people come to commerce? And then after learning commerce, accounting, how many people go for, say, working in an organization which maintains double entry? After passing MCOM, I have seen some people are working in some municipal corporation. They are doing all single entry. After passing MCOM, he maintains all single entry. He is forced. So very few people follow single entry. But large companies, all companies have to follow double entry. But single entry is followed by anybody and everybody. In this university, everybody is making some sort of accounting. Even you also make some accounting. Sometimes how much money received, how much pays to hostel, you can write it. Although you know double entry, but you are writing single entry. That way. So I said, double entry is more popular in the world, but more people love single entry, practice single entry. Correct? This dialogue seems to be contradictory, but absolutely correct. Now dear students, before I end up the time, can you tell me, this concept of double entry is very good, right? Very good. Scientific, unbiased, it's a science, double entry bookkeeping. Now, which country it first originated? Don't say UK or USA, don't say that. Because one rule of double entry came from USA and one from UK. But I want to know which country gave the birth of the concept of double entry, debit and credit. Anybody? I'll give you chocolate next day. Anybody knows which country first the concept of double entry was developed? This is a very basic thing. All of you must know it. These things must know it. Must. These are the basic things. Don't say this is not there in BCom course. Don't say that. As a commerce student, these basic things you must know. And regarding rules of debit and credit, you cannot escape, please. Even if it is not there in the BCom course, please learn at any cost. You can contact me also. But it's a must. Otherwise, in higher studies, you will be stuck up. You cannot proceed. Anyway, which country coming double entry concept? Okay, clue. Is a country of the maternal uncle of Rahul Gandhi. Now? Rahul Gandhi's mother belongs to Italy. Italy, dear friends, Italy. So remember, the concept of double entry is coming from Italy. Please remember this. Next day I'll ask you. The concept of double entry principle coming from which year it was introduced? Very difficult, nobody knows. Do you know? Which year? 1994. No. 1494. You are partially correct. He said 1994, I said 1494, 500 years back. 1494, can you remember it? 1494, mostly you are from Assam. During that period, Srimanta Shankardev was preaching his religion in Assam. During that time, Srimanta Shankardev was here. So that way you can connect and remember. 1494, the concept of debit and credit was introduced in Italy. And next question, you understand, who is the person who introduced? Tell me. Very good. Come here. I'll handshake with you. Please. See, what is your name? From which country of Africa?
Gambia.
See that? Zambia. Mugambia or Zambia? Gambia. So he has come from Gambia. He is our student from Gambia, Africa. And he could tell me the name of the person who first introduced the concept of double entry, means debit and credit. And his name is Luca Paisiello. Right? Very good. Well done. Sit down. So Luca Paisiello is the person who introduced the concept of double entry in 1494 in the country Italy. The basic things. Did you like it? Are you liking? Energetic? Excited? Okay. Very good. So looking at you, I am feeling energetic. So remember who introduced, you tell me the time. Okay, tell me the time. 1 minute. 10 minutes left. So Luca Paisiello introduced the concept of double entry bookkeeping in Italy in 1494. And now all over the world, this double entry principle is followed. The same debit and credit He has come from Africa, he will not find different. Whatever he is learning in India, he will be applying in Africa. You can work in America, you should be applying the same debit and credit. Same is universal, this rule, but you have to know it. If you want to know more of accountancy, go a long way in accountancy, you have to know double entry bookkeeping. So before I end up, let us revise instead of going something new. Am I talking too fast that you don't understand? It's okay, no? Okay. Sometimes if I talk fast, people cannot understand. It's not that, no? Okay. So let me revise. There are two approaches of debit and credit. One is coming from America, another is coming from UK. UK one is earlier one, and America they always follow something different. But whatever approach you follow, answer will be same. If you pass journal entries by approaching UK system, it will be same. If you follow American approach, same thing will be coming. It's a matter of mind only. You are thinking in mind. But I have experienced during my teaching experience that American approach seems to be better to remember. But both you should know. You should know both. Anyway, what is English approach? You tell that under English approach there are three types of accounts: personal account, real account, nominal account. All of you understand what is personal account? Name of person, then name of institution, business, organization, and nominal. Nominal is only name is there, nothing else. Like if you want to understand, you want to explain someone what is nominal account, you tell that person, ask your father to show you salary, ask your father to show you rent, ask your mother to show the commission. They cannot show because salary has only name. What is the color of salary? What is the weight of salary? But if you see gold, you can see this is real account. If you see building, you can see. But rent you never see. Remember that way. In short, I have explained, I have recapitulated, I have just revised, refreshed. Now, personal account, debit the receiver, credit the giver, right? Real account, debit what comes in, credit what goes out. And nominal account, debit expenses and losses, credit gains. And I taught it the students, and I was getting bored and bored and bored teaching and teaching. And you know, when someone gets bored, something new comes. Will you want to know what new came to me? When you say boredom, many people dislike getting bored, but boredom gives rise to something new, innovation. Let me tell you, what comes in debit, what goes out, credit, like that. How many times I'll teach and then make a poem? Will you listen to that? Not poem, song. I made a song out of double entry bookkeeping coming from UK. Real account. I made it. Don't write in book in exam. Just to remember. Comes in, debit, goes out, credit. Real account? Comes in, debit, goes out, credit. Is it wrong? Debit what comes in, credit what goes out. I have said made this way. Debit the receiver, credit giver. Means debit the receiver, credit giver. I made it debit the receiver, credit giver. Debit expenses, losses, credit all gains. Debit expenses, losses, credit gains. What's in it? UK? So this, please remember, so that you can remember I have made this way, but you follow in right as it is there. An American approach, I have told you, there are 5 types of accounts in American approach. Asset, you understand what is it. Liability, you understand. Asset minus liabilities, capital. Revenue, understand. Don't confuse with revenue and income. When revenue minus expense becomes income. Anyway, you know it. You have just refreshed. You learnt it, but I have refreshed it, energized, because you are going to study now in BCom. No, I have energized. But if you need any type of doubt, again, you can talk to me. You can communicate me. So, asset, liability, capital, revenue. The 3 you put differently. This is what? See, you can remember looking at my finger. This is what? Yes. This is what? Good. This is what? Beautiful. This is what? Very nice. I loved it. Just looking here, you can tell me everything. Nothing is written. So my rule is asset and expense increase debit. And nothing to remember. Only this one line you can remember. Asset and expense increase debit. Your sir will say then. You say then all others reverse. Don't say asset increase debit, decrease credit, liability decrease debit, increase credit. You cannot remember that way. Of course, you write that way, But remember this in the way I have said. Otherwise, assets are increased. Oh, sir, no, sir, no, no, yes, yes, like that people do, students do. Liability, 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 sir. This is not the way to learn. You learn in the way I have told you. You can remember whole life. In the evening, this will be ringing in your ears. You check in the evening. What am I talking now? Asset and expense increase debit. All others are reverse, opposite. So asset and expense increase debit means asset and expense decrease credit. And if we know these two, I did not tell you these three opposite. You can write it in the table. Please do it. And thank you very much. It was a very nice time with all of you. And all the best to you. Never think. One thing I'll share 1 minute video in your group. That video I'll share with you. Yesterday in the morning, I made the video 98 seconds, less than 2 minutes. That video I told that some people said, I could not do this because he did not help me. I could not do this because she did not support me. I could not do this because nobody helped me. These types of people, for them, I'll tell one thing, and to you also, I'll share the video also. Just think of a moment that nobody helps you, nobody favors you, nobody supports you. Your parents don't have money, you don't have anything. All negativity is with you, and nothing is positive, suppose. And from that moment you start working. I want to say, get self-motivated. Don't depend on external things. Get self-motivated. And you can do it. This is the first class I've told you. You can do it. Self-motivated. You motivate yourself because you are the source of enormous power, abundant power. And each soul is divine, as Swami Vivekananda said. Arise, awake, and stop not till the goal is reached. Swami Vivekananda said. So you also try to arise. How arise? You think, meditate, what more you can do, what is your positive point, what is your negative point, find out. And that way, you work on and on and on, and don't stop till the goal is reached. Thank you very much. Thank you. Thank you.